What's going on, everyone? It's live from GBPNZD, and today I'm bringing everybody some fresh new analysis on some trades which I took this morning. So we're going to get straight onto the charts, and the first trade which I took today was Pound New Zealand, which I took at roughly around 8 a.m. GMT. Now, the reason why I took the Pound New Zealand trade is I'm on the weekly time frame over here. On Pound New Zealand, we can see that this price level 1.88940, which is very close to a round number, which is very close to 1.8900. Now we can see this price level was a previous resistance, very strong resistance. We had price bounce off it numerous times, as we can see. We've had our first bounce over here, which was early 2016. Then we had another bounce, which was March 2017. And now we had our third touch where the market finally broke out in September 2017. Now we can see from when the market broke out of this price level here, which is 1.88940, price has been above it. Even though price did come and retest it at this point, if we check the date over here where we've got this very strong pin bar, it was on January the 7th, 2018, so 2 months ago. And we can see price rejected this level perfectly as it came down and didn't stay down here for too long. It created a wick, went straight up to this price level, which is above the 1.88940. Now, price is still above it, and we can see price is back to this price level. Now, if I drill down to the weekly and I look at current present price, we can see the market has been downtrending, and we can see that on Friday it created a very indecisive candlestick. Okay, so we can see that the war between the bears and the bulls was sort of equivalent, was very equal on Friday, and that indicates to me that yeah, we could potentially have some bulls kicking in. And the fact that this market has been bearish for quite a while, we are going to have to see some bulls kick in and retrace the market to the upper side. And another thing which I noticed is that this early on Monday, this market didn't create an upper wick. Okay, opened up bearish, opened up very, very weak, and it kept trending downwards, and it's still to create that higher upper wick. Okay, and the fact that Friday closed very indecisive and the bears kicking in straight away just doesn't seem right. Now, if I drill down to the 4 hourly and we look at a Pound New Zealand, if I just go to the present time over here, if we look at a Pound New Zealand, we see that it's back to a very strong support level. Okay, and we've got a very strong support level, literally this whole region. You can see this whole region is a support level, and the market is right below the EMA 50. For those of you who are actually asking me questions about my EMA, it's actually the EMA 50 that I use, and that's because it represents a whole entire quarter. We've got the 50 days excluding Saturday and Sunday. So yeah, I'd say the EMA 50 is probably the best EMA to use, and that's because it indicates the mean value of every quarter. And anyways, back to this. Looking at it, we're at a very, very strong support level, numerous rejections. So the odds are the market is going to reject this price level again, and we're talking about the pound right now. The pound is in a recovery stage. Right, the pound has been downtrending over the past couple of days, and that's because we had a few indecisiveness about Brexit, but we are getting out of that indecisiveness since we do have some very positive fundamentals coming out by MPs and also our Prime Minister Theresa May. And recently we had a very good agreement with Saudi Arabia. We've done a very, very good arms deal with them where they've got about £60 billion worth of investments going on in the UK, which actually removes that indecisiveness. It shows that people still want to trade with the UK, so the pound should start recovering from now on. Got numerous factors. It's at a very strong support level, a previous resistance on the weekly. It broke out of that level early on in 2017, and most likely we are going to see price stay above this price level, and we want to take advantage of that. Now drilling down to the 1 hourly, we can see how the market sort of did start trending downwards, and as soon as it came in contact with this support level, as we can see, the bulls started kicking in. Okay, and in fact, the market went back to the highs. As we can see, whenever the market has come back down to the support level, the market has been rejecting the support level and going back to the highs. Okay, now we can see the market has clearly rejected it and started trending upwards. All right, from when? Now, my entry was literally right over here at 1.89500, and that entry was based on this bullish candlestick over here. The fact that price closed above, okay, I'm talking about the body here, I'm not talking about the wick. Price closed above these lows, so it sort of engulfed this market. Now the market is retraced, and the fact that it's retraced adds even more confluence towards my side. We've had bulls kick in, some bears, a little retracement, and now I'm due to see a continuation towards the upside. And in fact, I'm seeing the market go all the way up here. Now, once the market has clearly broken above these highs, okay, once it's broken above this region, these highs, and I'll consider these as the current highs. Now, once the market breaks above this price level at 1.90180, you'll see me move my stop loss to my entry. And in that way, I've got a risk-free trade, and I've already got about, 2% locked in, just looking to get my 3% at TP. I do have 2 entries on Pound New Zealand just because it's a high probability trade. It's at a support, and I'm looking to take as much advantage as I can from this trade. Okay, so I'm going to move my stop loss back to the lows where it was. I'm going to keep hold of my stop loss at this level over here until the market decides to break out of these highs, and I'll be moving my stop loss to break even. Okay, so that's the analysis for Pound New Zealand. Now, the second trade of this week is Swiss yen. Now, looking at Swiss yen, you guys clearly see that I've got a sell on Swiss yen. Now, if we look at the weekly on Swiss yen, again, I'll just make this chart look better. Looking at the weekly on Swiss yen, we've had a very strong support level over here, correct? As you can see, the market has been bouncing off the support level numerous times, but on the weekly, we've had a very strong close below the support level. As you can see, the body and price itself closed below these wicks. As you can see, we've got numerous wicks over here, and the body, in fact, it closed below them. It closed below where price was initially rejected. It's not like the market created a wick at this price level region over here. Okay, well, I've got that bias on the weekly. Now, drilling down to the daily, I can clearly see the market is trending downwards and it's creating perfect swings. And we can see created a swing over here. Now, if I measure the swing, you can see it's a perfect retracement back to the 61.8% area, a very strong pullback. So I'm expecting a very strong continuation over here. And we've had a wick and we've had price reject this area over here where it retraced to, which is my 61.8 and my 50% area. And my trade is based on that. Okay, now drilling down to the 4 hourly, I can see the market has in fact rejected this price with a very strong pin bar. Now look at that pin bar, very strong, very long wick. Market went up to this price level over here, which was a previous support. In fact, now turned into resistance, as we can see. Numerous rejections over here. Market went back up to these price levels over here, rejected them, then went straight down. And again, the market formed another pin bar, as we can see. We've got 2 pin bars, 2 very strong price action signals at this region over here, a very strong retracement region. That's the 61.8% area. Okay, and that's enough confidence to tell me that, yes, there's more bears in this market than bulls, because I'm seeing numerous rejections. I'm seeing numerous bearish price action signals. So this is a textbook trade that's telling me, yes, this is a trade where you should go short, because that's where the probabilities look like they're heading to. Looks like the probabilities are heading towards the downside. Now, going down to the 1 hourly, we can see how the market has also formed these 2 pin bars over here. Now, literally, the entry was based upon these rejections I've had over here with the EMA 50. So I had the market trend downwards, and now it's below my EMA 50, and then I had it retrace. Now, check out this retracement. Okay, it's a very nice, clean retracement. If we start looking at this downtrend from this high over here, I can consider this high as my high swing. High swing, lower low, lower high, lower low. So what are we expecting over here? If we've got a lower low here, we've got a lower low. That means I'll be expecting a lower high at these highs over here. At a retracement, lower high. And then after a lower high, our expectation is a lower low. And that lower low will be created below this previous lower low. So I'm expecting this market to trend to at least this price level over here, to our new state, which is the 111 price levels. Okay, so it's a nice 40, 50 pip rack up. But in fact, my target are these lows. But once the market does reach this price level over here, I will be moving my stop loss to break even on this trade again. Okay, but for now, we'll keep our stop loss above here. And like I said, drilling down to the 1 hour, you can see I had 2 rejections over here on this EMA 50. And then, in fact, I had price close below. Look at this bearish candlestick, where the market, in fact, did reject this EMA completely. And price did close below it. And price is below this EMA. So I am going to hopefully consider Swiss yen literally melting all the way to the downside to these price levels over here, which is the 114.500. And the reason why this is my target is because this is the current low of this downtrend. Okay, so who knows, the market could create a support at this low and bounce up, or it could break below the support and keep going downwards. But for now, we will only follow the market and do exactly what the market is showing us. And that's a rule that you should trade what you see and not trade what you think. So guys, I hope the analysis was very clear and short. I do like to keep my analysis very short. I like to stay very straightforward with my analysis, not add too much to it, keep it very simple. Hence, KISPFX, keep it simple, price action, Forex. And that's what it's about. When it comes to KISPFX, it's all about keeping the charts very simple, very moderate, understandable, and very clean. As you can see, we don't use too much indicators. Everything we use over here is what MT4 provides us. the most utilized tool are literally your horizontal lines, trend lines, your EMA, and Fibonacci. Okay, so well, this was clear and understandable, guys. So what I'm going to do is that in the comment section, in the description section, I'm going to be adding a link where some of you can, in fact, go ahead and schedule a call with me. If you did enjoy this analysis, you can go ahead and apply for a free one-to-one session with me, and I don't mind going over the chart with you and giving you a little revision and just some confidence for you to pursue the financial markets if this is what you want to chase. If this is what you want to be in the future. If you want to be a trader, if you want to be a professional forex and then kind of professional forex trader, then I admire that, and I don't mind helping anybody that's pursuing that dream. Okay, so guys, I'm going to be keeping this series very consistent as well. So I'll be releasing another video like this on Wednesday, and then on Friday, and then back on Monday. So it's going to be every Mondays, Wednesdays, and Fridays. Sweet. So until next time, guys, take care. Bye. Hey, everyone. So I'm back to you lot with the same pairs which we analyzed early on this video. And the first pair we analyzed was Swiss yen. But I'm not really going to talk about Swiss yen. As we can see, Swiss yen is still consolidating around my entry, and it hasn't really done much. But pound New Zealand did hit TP, as you can see from the bottom over here, that it did hit TP, in fact. So I just wanted to update you lot on these trades, just show you guys how my trades turn out to be. I don't tend to hide my trades, whether I've won or lost, whether it hit my TP or hit my stop loss. I'll share my trades, and I'm happy to share my trades and the outcome of my trades. So yes, the outcome of pound New Zealand was that it did hit TP, as we can saw. So we're roughly in a good start to the week. As for Swiss yen, it is still consolidating, but I've got very, very, very high probability reasoning for this to start dropping either today or tomorrow or anytime this week. But we're going to hold on to this as I'm managing risk on this. So whether it does stop me out, I don't care, because if it does stop me out, I'm only going to lose chicken change compared to what I've already made from pound New Zealand. Okay, so I just thought I'd share this with you guys. And again, if anyone has any questions about Forex, like I said, I'm going to leave an application form in the description. Go ahead and fill out the application form and schedule a call with me on the next page. And I'll be happy to jump on a call with you and share some analysis with you and just share with you my methodology of trading and how I actually learn how to trade and the strategy that I use. That being said, guys, I do hope you have a phenomenal week, and I'll see you on the next video.